We got Joe Tigay, he's a managing partner at Equity Armor Investments. So Joe, Amazon, we've got some more bulls kind of creeping in. Is it time for a catch-up game?
Yeah, I guess so. Of course, we had that all-time high last year, the 2050 area. So Amazon's down a little bit more than the market. It's not on a new all-time high. I think it can reach that new all-time high. I think obviously the analysts out there think that's going to happen in short order. And you look at the last quarter, we're all hearing that the consumer is stronger than ever. We're all hearing it was a fantastic holiday shopping season. Well, apparently they didn't shop at Target. So where did they shop? Maybe it was at Amazon. So we'll see next week when we get that earnings report. So I think there is room to the upside. There is a possible big result coming out of earnings.
Yeah. Now, the logic here on the consumer, I like it, because we were talking about the same thing. When Target came out, maybe people just didn't shop there during the holiday season. Maybe it was easier to deliver, next day with Amazon. So look, we'll see what the numbers show, but how do you actually go and trade a stock that's this expensive, Joe? I mean, do you go options?
It's super, yeah. Well, I mean, we're looking at, I'm looking at Feb right now, but I'm just looking at, the 27 to 28 implied vol. Yeah, it's actually not that crazy for Amazon, but given the fact that it's a $1,900 stock, those options are super expensive. So it really depends on your risk reward profile. Now, if you're a conventional trader that has a little bit tighter risk reward profile, the proper move, if you wanted to buy a call, would to do it in a spread form, because look at the 1900 call. It'd be something I'd want to do as a stock replacement. That's $57 it was as I was coming up to the floor. So that's pretty juicy just to buy a one lot on there in an average account. So if you looked at maybe doing a call spread by the 1500, 1525, that comes all the way down only to for a $25 gain. It's only a $10 purchase for that call. So you can turn $10 into $25 if it trades above, if it closes above 1925 on Feb expiration. So that's the type of risk reward you got to play. Now, if you want to just play, just go all in on the melt up FOMO trade that we're having, that, this is a bubble, but might as well profit off of it. You could look at even a higher call spread. You can buy some more of those. Look at the 2000 Feb calls. You can say, we're going to have a big earnings event. We're going to get a 10% pop on earnings. You can see Amazon trading 2,100 before February. Those calls are trading $20. Again, yes, $20 is super expensive to outlay for one option, but think about that. If it's a 10% increase in Amazon, we'd be at 2,100. That $20 turns into $100. So that's the risk reward you got to play with Amazon. It's not for the faint of heart, but you got to know your own trading style. You got to know your own account and know what you're comfortable losing, and know what your expected gain is going to be. And if you're comfortable losing that $20, you could have a big reward at the end of the day.
Oh, hold on, I got to go back real quick, Joe, because I got to check my ears, but I think you dropped the B word there. Did I hear bubble? Hey, if we're in a bubble, how come Amazon's not all-time high? Come on, right?
Well, Amazon should be joining in. If the market, right now we're at 23.4 PE in the S&P 500. If we are going to go to 27, 29, Amazon's going to participate in that. If we are going to see the real bubble we saw in 2001, the real bubble we saw in 2007, Amazon's going to be there. Amazon's going to be trading 2,300 in short order. So that's, if you want to play, let's just throw all in, just bet put it all on red. We're going to have this bubble. That would be the play the lottery play.
All right.
It's not something I'm doing. I'll just say that, but
hopefully
that'd be the thought process.
Viewers are grasping the tongue-in-cheek that I hear from Mr. Tigay here. So next week, by the way, the 30th are the earnings. So if you're doing the Feb expiry, though, you're going to be getting the earnings and then another basically month on top of it.
And actually. Yeah, so I would actually be looking at stock replacement in the 1900 call. I could lose $50, but again, the call, I could only lose $50. 1900, this stock could go down to 1,700 after earnings, give or take. So that you could lose $200 on the stock. So you got to know that risk reward. Now again, I'm looking at it today. Earnings are next week. I expect volatility actually to rise into the earnings event. And if the stock does go up, if volatility does rise, at that point I'd look at selling a call, maybe lock in that winner, or just say pick an area where I'd like to get out of the stock, maybe 1925, 1950. I'm happy to take that $50 gain in the stock price at that point.
Yeah, all right, cool. Joe Tigay, appreciate the analysis here. A deep reversal in the shares last time. Big sell-off at Amazon was short-lived. Joe, nice work from the CBO, managing partner at Equity Armor Investments.